Welcome to TMS Insights. Ben Clark and Jeremy Hook bringing you what is the start of September as a wrap-up of the August reporting season. And Ben, it was expected to be a very good reporting season. Overall, we're impressed with the breadth and quality of the earnings, and it's put the share market's rise in good context. Overall, what did you find in the reporting season?
Yeah, I think it was pretty good, Jeremy. I mean, there's still some cost pressures coming through with a lot of businesses, and there was some good news in there with some companies, and there's some bad news out there. So it was still a bit patchy, but I think the overall theme is definitely a lot more confidence amongst CEOs. When you listen to CEOs present, they're probably more confident about the outlook than we've heard them for a number of years, I think.
Yeah, because you often get companies reluctant to give guidance, but we certainly got some good, clear guidance from companies.
Yep.
And overall, resources particularly strong, earnings-wise, but a lot of companies across sectors performing very well.
Yeah, I think so. And look, it was interesting because certainly the higher PE, high growth stocks were many fund managers warning that was a dangerous place to be coming into the earnings season, and they were actually the outperformers during the month.
Yeah.
And you know, that value area of the market, which is just so unloved, and you wonder how long that's going to continue for. But there was still some pretty big bombs in there, and there wasn't, you wouldn't say there was a lot of good news.
Yeah.
So look, I think it, as always, comes back to the stocks that you own.
Yeah.
But generally, I think it was certainly more positive than we've seen for some time.
Okay, so getting into some names, Ramsay Healthcare reported in the last week. It has not performed particularly well over the last year or so.
Yeah.
A PED rating going on. They gave guidance, but it wasn't what the market wanted, was it?
No, it wasn't. So, the result was bang in line with what they told the market to expect. 2% earnings per share growth forecast for the coming year, which is definitely lower than the rates we've got used to from Ramsay.
Which has been certainly double digit, but almost 25%, 20% zone for most of the last decade.
Yes. So, look, I think two things. Firstly, the market's already factored that in to some extent. The stock's trading on about 8.5, 19 times earnings, which is cheaper than we've seen it for a long time.
Yeah.
And secondly, the CEO sort of said, we're going through a difficult period at the moment, but guiding to a pickup of decent growth in 2020. So we'll have to see how that plays out.
Yeah, exactly.
Yeah.
And they're local factors, but also European factors
Definitely.
that play there.
England and France continue to be issues, but again, he sort of said that we're getting through that period, and hopefully this is the last tougher year for Ramsay.
Atlas Arteria is a toll road operator with global operations. It reported last week. Again, in terms of focus, this is a growing yield stream. The result was a little bit lower than expected, but this stock started to come into focus for us, particularly with the fact of an unfranked distribution going forward.
Definitely. So, this is an offshore Transurban, effectively. I think it was spun out of MIG back in the day.
Yeah.
Yep. And their main asset is a big toll road in France. And what's happening with them is that they've had a lot of funds locked up against that toll road, and they've been refinancing that debt, and they're able to start paying in the future much better cash flows out to investors, unfranked yield, which is pretty attractive. And there was a bit of sell-off in that stock because of the check they had to write to Macquarie to internalise the management.
Yeah, people will remember that was called Macquarie Atlas previously, so it had a name change earlier in the year.
Yep.
So that's one that we might be able to talk to you about in terms of a good income stream in that space. Another one in the toll road space, we might bring some news on Transurban, which got the ACCC approval on the WestConnex.
Yes.
And we'll fund that with a rights issue.
Yeah, so it's doing a 10 for 57, or about roughly a 1 for 6 at $10.80, which I think is a good entry price. That should hopefully put a few of the concerns to bed about them. There's a lot of capital they're going to have to spend on that toll road in the next few years before they start to get revenue coming through. So the distribution might be a bit flat for a period of time, but they've got great partners, and I think they probably will look back and say they bought that asset well. They've been such good operators over the years.
Yeah, another good one too, and a good yield as well in Transurban, certainly at 10.80. So encouraging everybody to take that up.
Yep.
Moving from infrastructure to somebody who benefits from spending in that area, Boral. Again, warned a little while ago, maybe 2 months ago. Good result, well received by the market. And Boral's back in town. Yeah,
well, the US acquisition, after I think they got hit with 2 hurricanes in America, and that slowed work down considerably, and a big freeze. But then they've had a really good quarter in the last quarter, and Mike Cain's still very upbeat about the outlook for the US economy and for that business. And also, I mean, we actually sort of interviewed him on the Sky Business program, and he was the other thing he really pointed to was don't get too downbeat on Australia and the housing market sort of coming off, because there is enormous infrastructure spend coming. And he sort of said if the housing building starts were still motoring along, there'd be real issues getting labour and materials. So
actually helps them out a lot, and they are more infrastructure than residential, that's for certain. Moving along to, when we talk residential, plumbing supplies, a stock we really like and have had an eye on, but it's been a bit expensive of late, until now maybe, Ben.
Yep.
Reliance Worldwide, good result, major transformational acquisition during the year of John Guest in the UK.
Yep.
Gives them global reach, but also product range as well.
Yeah, absolutely. I mean, actually, Reece is another one that's doing, both are doing big pushes into America.
Yeah.
Both businesses, I think, show outstanding progress and also outlooks. Reliance does look good to me on the pullback. This is a business that manufactures a lot of push to connect plumbing supplies, and they bought the largest player in Europe, which makes a lot of plastic supplies, which they can bring into America. Good sense in the deal, I think, and could be a good buying opportunity.
And value with the pullback in the share price that's followed. We'll bring that to a bit of a head and looking at the market now. We've got through 6,300. The market's got confidence. We go a little bit quieter for a little while in terms of some of the earnings reports. There are sporadic reports that come out, and then we move into bank reporting season. But Ben, just maybe a little bit of a guide for everybody at the moment. The macro settings are good. The earnings environment's good. Healthy view on the market overall.
Yeah, I think so. And look, one thing that a lot of clients wouldn't see is what's happening in the bond market.
Yeah.
And the Australian 10-year bond yield's actually, for the first time this year, gone under 2.5%. Now, one of the biggest drags on equity pricing can be high rising interest rates. So that's something that should give our market some support. Look, we might see a bit of a pullback in the next couple of months, but I think the settings are still there for a positive end to the year and over the next couple of years. Certainly balance sheets I think are in great shape. A lot of businesses are growing nicely, not as fast as the US businesses certainly are, but still things look pretty good to me.
Excellent.
What do you think?
I agree. Look, this is time when the market will respond to the two big things, interest rates and earnings, and we've got a healthy sign on both. People will confuse rising mortgage rates, which is happening out of cycle rate rises by the banks. They are going on, but the actual bond market is improving. And as you said, it's in the best shape it's been all year.
Yeah.
So that's what we base our valuations on, and the market will continue to reflect. So I agree. It's a good for now, but we are conscious of the very good performance of some high growth stocks and valuations that have got up there. So we have to keep that in our focus, and we are, as we look forward to the end of the year and some of the good news that will follow. So that's all in the reporting season review. We look forward to bringing you an update later in September.